Hey there, welcome to our video on different types of stocks. Today, we're going to dive into the world of stocks and help you understand the different types of stocks that are out there. So, let's get started. Before we get started, we would like to thank you for watching this video on Stock Expo channel. If you found this content helpful and informative, please consider giving this video a thumbs up and subscribing to our channel for more videos like this one. Don't forget to hit the notification bell to be notified when we post new content. Stocks, also known as shares or equity, represent ownership in a company. When you own stocks, you become a shareholder, which means you have a claim on the company's assets and earnings. Companies issue different types of stocks to provide investors with various rights, preferences, and benefits. Common stocks. Common stocks are the most prevalent type of stock and the foundation of many investment portfolios. When you own common stocks, you become a partial owner of the company. As a common shareholder, you have voting rights, allowing you to participate in the company's major decisions, such as electing the board of directors. Common shareholders also have the potential to receive dividends, which are a portion of the company's profits distributed to shareholders. However, dividend payments are not guaranteed, and common shareholders are typically the last to receive any remaining assets if the company faces bankruptcy or liquidation. Common stocks also offer the potential for capital appreciation as the stock price increases. Preferred stocks. Preferred stocks, as the name suggests, offer certain preferences and benefits over common stocks. Preferred shareholders receive a fixed dividend payment, which is typically higher than the dividend paid to common shareholders. These dividends are paid before any dividends are distributed to common shareholders. Preferred shareholders have a priority claim on the company's assets and earnings over common shareholders in the event of bankruptcy or liquidation. However, preferred shareholders usually do not have voting rights or participate in major decision-making processes. Preferred stocks offer a more stable income stream but may have limited potential for capital appreciation compared to common stocks. Growth stocks. Growth stocks are shares of companies that have a high potential for growth. These companies typically reinvest their earnings into the business rather than paying dividends to shareholders. Growth stocks tend to be associated with companies in industries such as technology, healthcare, or innovative sectors where there is potential for rapid expansion. Investors in growth stocks primarily seek capital appreciation by investing in companies that are expected to increase in value over time. Growth stocks may carry higher levels of risk due to their potential volatility, as the market may already anticipate future growth and price the stocks accordingly. Value stocks. Value stocks are shares of companies that are considered undervalued by the market. These companies often have stable business models, established track records, and solid fundamentals but may be trading at a lower price compared to their intrinsic value. Value investors look for stocks that they believe are priced below their true worth, with the expectation that the market will eventually recognize their value and drive the stock price higher. Value stocks generally offer a combination of potential capital appreciation and dividend income. Dividend stocks. Dividend stocks are shares of companies that consistently pay dividends to their shareholders. These companies typically have a history of stable earnings and generate enough cash flow to distribute a portion of their profits to investors. Dividend stocks are popular among income-focused investors who seek regular income streams from their investments. Dividends can provide a reliable income source, especially for those in or nearing retirement. Dividend stocks can be either common stocks or preferred stocks. Blue chip stocks. Blue chip stocks are shares of large, well-established companies with a history of stable performance, strong market presence, and solid financials. These companies are typically leaders in their respective industries and have a reputation for reliability and stability. Blue chip stocks are considered less volatile compared to smaller companies or growth-oriented stocks. They are often considered as core holdings in long-term investment portfolios. First up, we have common stocks. These are the most common type of stock out there, and they're a great way to invest in companies that you believe in. When you buy a share of common stock, you're essentially buying a small piece of ownership in the company. And did you know that some of the biggest companies in the world, like Apple and Amazon, have millions of shares of common stock available for purchase? Stock chart or graph. Common stocks can be a bit more volatile than other types of stocks, so they do come with a bit of risk. But they can also provide great returns over the long term. Did you know that the oldest stock exchange in the world is the Amsterdam Stock Exchange, which was founded in 1602? Preferred stock chart or graph. These are a bit different from common stocks, in that they give you priority when it comes to receiving dividends or other payouts. And here's another fun fact for you. Did you know that Warren Buffett, one of the most successful investors of all time, is known for his love of investing in preferred stocks? Now, let's talk about penny stocks. These are stocks that trade for less than $5 per share, and they can be a bit riskier than other types of stocks. Lastly, we have blue chip stocks. These are stocks of well-established companies that have a long history of stable earnings and dividends. Blue chip stocks tend to be less volatile than other types of stocks, making them a great choice for investors who want a more stable investment option. We hope you learned something new today and feel more confident in your knowledge of stocks. Thanks for watching. If you have any questions or suggestions for future videos, please leave a comment below. Thanks for watching. If you have any questions or suggestions for future videos, please leave a comment below. And if you know someone who would benefit from this content, please share this video with them. Your support helps us grow our community and create more valuable content for everyone. Thanks again for watching, and we'll see you in the next video.